South Africa's Competition Tribunal has started making its case on why more than 27 local and international banks should be penalized for colluding to manipulate the rand. According to the Commission, the banks used instant messaging on trading platforms to share sensitive information that would inform unscrupulous trades. Banks such as Nedbank, Absa and Standard Bank have been named as being active members of these chat groups. The Competition Commission says UK bank Standard Chartered has admitted liability in the case and agreed to pay a fine of almost 43 million rand. We're now joined by currency expert Andre Cilliers, the director at TreasuryOne, to just break down the story. It's been 8 years of this particular case, with the Commission trying to pin these particular banks on the rand manipulation. Can you just state for us and for the benefit of our viewers, what constitutes that rand rigging?
Good afternoon to everybody. Yes, I think I want to start off by saying very, very clearly that when one speaks about manipulation of the rand, then it's not manipulating the currency to move into a specific direction over a longer term. This comes down to manipulation of the currency on a day-to-day basis, where you manipulate bids and offers. Now, you have to understand the trading systems within a bank and between banks and trading platforms. So, trading platforms is where banks would typically go and put in a bid and an offer. In other words, places where they're willing to buy and places where they're willing to sell dollars. When there's big ticket deals, and what we refer to there as big ticket deals is big orders that needs to go through the market. It might be for a merger and acquisition. It might be for a big ticket deal that goes through for hedging purposes of imports of cars, exports of platinum, whatever the case might be. And then the banks manipulate the currency by removing bids or removing offers, so that it appears that the market is only moving in one direction. That creates a movement in the market, very short term, and that enables the bank to execute the trade then at better levels in their favor, whilst the client actually still gets the lower rate. And so it's not manipulating the currency to say, for argument's sake, that the rand's now trading at 19, and over a longer period of a year, we would like to manipulate the currency to move into the direction of a level of 20 or 18 or whatever. It's on a day-to-day basis where you manipulate bids and offers, and that influences the movement short term.
Is it normal for some of these companies to be in one chat group talking about the movements that would shift a currency's performance? Let's say that pair between the dollar and the rand. As in to say, do they use the same trading platform or them coming together under one platform? Is that a normal occurrence?
So the trading platforms that I refer to is trading platforms on Bloomberg, it's trading platforms on Reuters, etc. So it's a trading platform used by many, many banks. On those, there is chat rooms where traders can speak to each other, but let's not forget there's also something called a mobile phone, and there's something called normal telephone lines, and there's something called emails, and traders knows each other within the market, and so there is talk between traders. I take it back from my days way back in 1985 and 86 and so forth, where you did call banks on a daily basis. You called your friends in the bank, on the opposition banks, to find out what they see, what do they think of the market, etc. And sometimes there was an exchange of more, call it, these decisions and discussions around certain transactions going through the market. In later years, it did obviously follow through to conclusion and collusion between traders in manipulating these things between bids and offer spreads. And obviously in these chat rooms where they should never have chatted about that, it was picked up, and that's where the whole Commission of Inquiry was established in the Competition Tribunal to investigate these things.
Would then the tribunal try to prove insider trading where some of these traders within the banks are sharing information, especially on particular events, let's say on the South African Treasury or something happening at the SARB? They would have information before and they would peg either against the rand or bet for the rand given this information ahead of time.
Yeah, now we're touching on something very, very dangerous, because saying that you've got the information beforehand says that there's a leak out of the other end, and that's a very dangerous one. I think what the Competition Tribunal here was referring to was collusion between various banks to manipulate the currency with the knowledge that they have of external transactions by customers, and not so much the knowledge of information that was leaked.
And Andre, how would this affect then?
If there's information that's leaked, it gives you the advantage of preempting the move that the currency will make after the release of such information, and that would be insider trading. But that's basically, as far as I'm concerned, fairly criminal.
How would this affect a country's currency, like the emerging currency, the rand, for instance, when we look at the years 2015 to 2017, where we've had different changes in terms of finance ministers and things and events that could have moved the rand quite sharply? How would that affect a country's currency and economy?
Okay, that's why I, on the first part, specifically stressed that it's short term. You cannot influence the move of a currency over a longer term period. That would simply mean that you have to take very, very big positions and hold them for an extremely long time. Now, that would require capital, that usage from your side as a bank. That would involve positions, increased positions, and that would violate most probably some of your overnight currency limits that you have set by your compliance departments and your risk management departments within banks. So that's very difficult, but also longer term, a currency is influenced more majorly by economic fundamental situations, so very difficult to manipulate the growth of a country or the monetary policy committee meetings of a country and the movement of interest rates or preempt the budget of a Minister of Finance for a year in advance. So once again, I'm stressing that the manipulation that we're speaking about here is short-term, between bids and offers, with short-term influence on the movement of a currency.
And then would for instance, in the case of Standard Chartered, they've come forward and taken liability and taken, a settlement with the tribunal. Would that also mean that they are guilty, or is just a company that doesn't want to get involved in the lengthy case that we're about to face?
Firstly, I don't think you want your name back through the man in a lengthy case. Secondly, I don't think anybody admits to anything if there's not a certain part of guilt on their part. So I do not think that Standard Chartered is innocent in this case. If they were completely innocent and they could prove that they're innocent and that none of their traders was in any of these chat rooms and never spoke about transactions with other banks in their chat rooms, there's no ways that they would have agreed to just pay a fine. So I think by paying a fine, you are admitting that you were part of such collusion.
Now, the Commission usually fines or gives a penalty of around 10% of the company's revenue. A lot of these companies make way, way more in terms of billions on these trades. Do you think 42 million rand was a slap on the wrist?
I think 42 million rand, if you divide that by 22 and you translate that back to pounds for a UK bank, it's actually it's like buying a lucky packet for a baby. So I think it's really not an appropriate fine. I think it's not nearly an appropriate fine in terms of what they could have made out of this. But apart from that, simply by admitting and paying a fine, admitting that you were part of such collusion, I think warrants a much higher fine. So I think it's much too small.
Do you think then the tribunal has a stronger case, especially given that the US has already dealt with some of these banks for the same kind of behavior?
I think it's difficult cases to actually find the exact amounts that people made. I think it's cases that is very lengthy and could be dragged out for another 5 to 10 years before you actually get to the conclusion of anything. So I also think from a tribunal side, the sooner that you can try and conclude this and have people admit that they were part of that, so that you can put it to bed and rather have the agreements that something like this will not happen in the past, is also in the interest of all parties. And
just before I let you go, Andre, what kind of skills would the tribunal need for this particular case? Because, of course, banks have all the treasure chest needed to have a lengthy case, for instance. And what kind of skills and expertise would the tribunal need to have to make sure that they pin those banks that are guilty of this currency manipulation?
Well, you would definitely need some experienced people on the side of foreign exchange trading. You would definitely need a couple of chartered accountants. And then you would need to go through the books of the banks trade by trade over a number of years. And now, let's not forget that it's not 5 trades a day that you have to look at. There's thousands of trades that you need to look at, and thousands of discussions, thousands of telephone calls with customers, and the size of the orders, the size of the deals, the graphs of the currency, how it moved, the timestamps of trades. It would be an extremely involved. I think the administration around that would easily take you 4 or 5 years just to try and untangle that, and then you still have to go into the situation of a hearing and testimonies and so forth. And that's why I say it could take 5 to 10 years.
All right, that was our currency expert, Andre Cilliers, director at TreasuryOne, saying we could have a long way to go when it comes to this currency manipulation case.